Hi guys, welcome back to another weekly analysis video. I hope you're doing good. From the last time we discussed, market has moved quite a bit. We had a good rally in the market from the low of 13th June. This rally, we discussed the possible outcomes in the first week of July. Let's quickly first have a look at the quick recap of last time what we discussed. 1 minute recap of the last video. The other option I have is just mark this as wave A, entire thing. Then coming weeks, if we start seeing a correction, it'll be wave B, then entirely as wave C, D, and E. This is also possible. It depends on how far this up move wants to go. So what do you have right now? And based on the so far analysis, you have a structure which is going to reverse anytime. All right. First thing you have is one structure can reverse anytime. Reverse anytime. Then fall style will be sharp fall. Sharp fall will come anytime. So how do you trade? This is the question now. How do you trade this? Once you know this kind of scenario is going to happen, where movement will be very fast in the trending phase, and then choppy sideways movement will be there for more time. The time consumed for sideways momentum will be more than the next fast leg. Sideways, then again fast. So this will complete your wedge type pattern, diagonal type pattern. So I hope the outlook is not changed much, but it's quite clear that what we expected happened in the market as per the wave pattern. Right now, what we're going to do is we are going to build a possible outlook for the remainder of the month. All right, using a little bit of time cycle, I'll show you what we can do. First thing, this entire fall from the top is definitely in a three-wave pattern, but there are chances it can also split into an impulse. We'll talk about that in two scenarios. One is the primary scenario and then a secondary scenario. So in the first primary scenario, what do I mean by primary scenario is that what we will follow first. Secondary scenario is if the first view fails, we will focus on the second view. This is not based on some outlook outside the market. We'll practically look at only charts, and whatever chart pattern tells us, we will follow that. First look was this fall from the top, nearly 25,600 levels. This fall is in a three-wave pattern. That is a primary view. So the first view, all right, primary view. First view is that it's a three-wave fall. So this you can mark it as W, X, Y. Also you can mark it as your diagonal expanding also. That's not an issue. If you're taking this as wave A, this part as wave B, and then expectation of a wave C fall. All right. So this two expectations, I think I shared it earlier in the Telegram group, where I told you that there are two options from this point. First option is that market breaks this range, right? Market breaks this range, comes back down, and then goes higher to form a new high. If this range is not broken, we had the secondary bearish scenario where market will form your A wave, your B wave, and C wave. So the entire thing, what we had was from 9th of July, it will give us a trending move in the market. That is what we were expecting, a directional move as per time cycle. All this again was already shared in the Telegram group. Those who are there, those who have joined there, it's completely free, right? But just keep in mind, right now it has become private. But before it was public, it's free to join. It is private right now because of some data I'm sharing there. Simple reason is that you can join, you can leave anytime, but joining is only once. The reason for that is because when I'm sharing some sensitive data, I don't want it to go completely in the public. Anyway, there are some bots which attack. There's some bots which try to take information here and there. So that's why I have to make it private. Right now, the structure is very simple. Primary view, like I said, what we're going to see is that as per the recap video, if you see, we're expecting some sort of an ABC pattern. Change the color 1 second. Right. So in this ABCDE pattern, if I just zoom out a little bit, let's go to daily time frame. Okay. So this is one of the possibilities. Why are we taking this possibility? Is because we are expecting some degree of a fifth wave to continue in the market. From where is this fifth wave in a higher time frame? From the swing low of 13th June. All right. So from the swing low of 13th June, we're expecting some sort of a, this was a flat correction, irregular flat pattern, expanded flat, whatever you want to call it. This is a flat pattern. And then we started a directional up move in the market, right? So first primary scenario is that this sort of a pattern is going to be made. That is our idea. This deep correction has come all the way to 25,000. So very good deep correction. And then this gives an opportunity for the next rise in the market, right? This is quite clear right now. When we go down to a smaller time frame, key date for next week is after 23rd. So after 23rd, if this entire fall completes by then, it will be very good. Right, 23rd, if it goes a little bit sideways. From here, this point, it's an impulsive fall, no doubt about it. Here, this point is a major confusion point because there was a lot of your, let's say, manipulation happened here. If you see Nifty's chart here in this small point here from 15 July, what is the problem here is because of the structure. Usually I can easily predict if this correction is going to happen, if you're going to go for a further fall. Why Friday's fall was a little bit unexpected? If you look at Nifty's chart here, I'll show you Nifty futures chart. Now look at Nifty futures chart. Key point here, Nifty spot chart again, that this high was breached, right? This high was broken a little bit and then market started to fall. No issues with that. But if you look at Nifty's futures chart, look at Nifty futures chart, what happened here? The high did not break and market continued to fall. So this tells us a totally different pattern, right? So the meaning of this rise is not found. What is the meaning of this rise? Then it's not a three-wave pattern. It's not a three-wave pattern. No, it's just one simple blank rise. So all this is some sort of a price distortion happening in a lower time frame, but higher time frame, it is the same. This is a fast impulse move. This is some sort of a wave four here. The correction is not clear here, and then market falls. So primary view, I told you that we will look for it and a higher time frame. We look for a pullback on top for a mean reverting strategies. If you want to look for that point here, is that an anchor point was formed at this level here, right? This was your anchor point zone, which I explained it in the Telegram group. What does this mean, anchor point? I have made an operator trap series where you can understand my own private research. Somewhat I've shared there, where you can understand this anchor point is something like a pull, like it's a heavy weight. It will wherever the direction market goes, it will pull back once to this point. From here, if the market goes upside, it will come back again once to retest it. I gave you the example so many times of a ship. Suppose a ship is in the sea, right? The big ship is in the sea and it wants to pause. It wants to hold in one area. So what they do is a ship anchor, they drop it into a water. I think all of you know it. It looks like this, something like this. They drop into the water a huge piece of iron shaped anchor made of iron completely, very heavy. It goes deep into the water, and wherever, because of the waves, because of the wind of the sea, if the ship goes towards this direction a little bit, it will come back once to the center. It won't go far away. If it goes like this towards, because of the water, it will come back here. All right, this is the basic idea of an anchor, to hold it in one place. So price from wherever, whichever direction it goes here, it will come back once to retest this point. This is a primary, your target on top. After that, it can go beyond it, no issues, but this is a primary target. All right. Right now, simple equation, what I'm looking for in Nifty structure is that on a smaller time frame, this entire drop looks impulsive. And right now, it's totally unclear because if you see, this moves from here, it looks like a three-way pattern, right? It looks like a three-way pattern pullback. If you give the benefit of a doubt and say, no, this is not a three-way pattern, this is an impulse 1, 2, 3.1, 3.2, 3.3, 4, 5. Fourth wave, wave 3 gets over here, wave 5 then, whatever. The sub waves are getting distorted in a very, very regular manner. If you look at this rise here also, it makes no sense. What is this rise here? So right now, I'm not going to completely wait for subwaves. I'm going to look for overall structure levels. So overall structure levels, by that, what do I mean? If you put in Fibonacci extension over this fifth wave in our Elliot wave master course, we learned that we are expecting it can go all the way up to 78 to 1x, but should not cross 1x. So we have a boundary level here, right? We'll just draw this boundary level. So as long as price is sustaining in this or above this fall, as long as price is sustaining above this, we can consider our primary view is intact, right? This is one of the validation points. So what do I mean by that? From this low, we are taking this as A wave, this fall as B wave, right? So as long as price is above this, sustaining above this zone, this can be intact, and then we can look for a up move for C wave. Whenever this zone breaks and market sustains below it, then this A, B, C, D, E diagonal pattern is not valid anymore. All right. So this is a primary view right now. Primary view, and the validation point is here. As long as price sustains above it. So this level is around 24,700 to 24,800 level. Simple as that. Validation point. So tomorrow, if there is a bounce, next week, suppose if there's a bounce and market goes slowly above this and then falls back again. So obviously that earlier view we had of A, B, C, D, the diagonal pattern is not valid anymore. So this level holds the key at the moment. All right. For a longer term picture in the Nifty market. Now, regarding primary view is completed, you understand what to look for. Secondary view. I always tell my advanced concept members that keep two views all the time. You can't go in the market blind with one view. So you can't drive a car with one eye closed all the time, right? So you always have to see with both eyes clearly what market is doing. So here we'll plan another secondary view. Why are we planning secondary view? First question is that. I'll tell you one simple reason. Many times I've told you recently in the market, there are a lot of wave distortions, meaning wave 5, I've shared some examples in the Telegram group also. Wave 5 can make your wave impulsive wave, right? It can be a diagonal wave like this, or it can be dump. Pump and dump also can happen. This is in a wave 5. These are the three patterns we can expect. But sometimes right now what is happening is because it's just making a three-way pattern. It's just making a three-way pattern falling. This should not happen in wave 5. It should not happen. Why is it happening? Why is it happening? It's because of algos which are triggering. If when you place big quantities, that is pushing price so high when there's no liquidity that it does not need. So the overall structure is same. It's wave 5, correct? But inside wave 5, there is some distortions in price because of illiquidity or your algo manipulation here, liquidity manipulation. All right. So if we are considering this from the low bottom as wave 5, correct? From here, we're considering this as a wave 5, right? This rise. So if this is a manipulated move, if this is a straight up pump in the market, this is your three-way pattern, right? If this is your three-way pattern, which should not happen, and it happens, then market will break this low. All right. Market will break this low. This will be a primary target on the swing low. 24,500 will be a primary target. And then later on in a couple of 1 or 2 months time, we can also reach all the way down to 24,000 level. Then big range will happen. Big range will trigger here. This range will come in play then. All right. So this secondary view, right, is very important. This zone will tell us what market wants to do. 24,700 to 24,800. This is a very critical zone right now. If this is intact, like I told you, primary first view, market can do this kind of a pattern. All right. ATH and little bit higher also market can go. If this is not going to happen, this is first view. Second view is that this breaks when this breaks, market can do anything from here. It can go straight fall, or it can do some time pass moves. This is also possible, right? So the range of action will change to this big zone, right? This big zone will become activated from 24,000 to 25,600 level. 1,600 points range will get activated. Market can do 1 month, 1.5 month time pass in this entire zone. If this zone breaks 24,000 level of 24,700 to 24,800, right? This is the zone we are going to focus on for next week. If market does not touch this and turn, very good, no issues with that. No issues with that. So what I'll be looking for here in case I want to enter the market, last as per the message in the Telegram group, what did I tell you? That it's better if we have a, because this is some sort of a wave 5, market can reverse anytime. It can come after 23rd, it can come before 23rd. That's up to the market. Now, why this 23rd is important, I'll talk about that. But before that, strategy wise, I told you a wide strangle. Wide strangle doesn't mean something new, it's just a normal strangle with far OTM for weekend decay, right? For weekend decay, far OTM options here is smart because it'll give us a good range. And after that, what we can do is, when if the market goes sideways a little bit and falls down into this zone, we can, it is smart to book out. I'm not giving you tips to trade in the market. I'm just telling you what I am planning. Here it'll book out, the C leg will be in profit. So this week I can plan for booking this C leg. And then I know that this is a small low risk setup, right? This is a small zone. If I want to enter longs, this will be my small risk zone. So here I can add more puts. So if the expiry happens anywhere above this zone, I will be in profit. Similarly, if I wanted option buying or futures, this zone again will be a small a low risk setup. What I want to see here is that anywhere here, this zone or above it, price to sustain above it. That is more important for me. N pattern on the rise is very important. Whether it comes next week or in the first week of August, no issues. But this N pattern is very, very important. All right. Once this N pattern forms, that will confirm, yes, market will go. What is the primary target of my analysis is that this anchor point will get retested near 25,400 to 25,500. This is my upside first target. I'm not talking about ATH. I'm not talking about anything. First primary conservative target will be this. All right. So this is what I'll be looking for in the coming week. Time cycle wise, now let's get back into that time cycle. What happened here? We discussed this already in the Telegram group once. I have already given an update. 9th onwards, I told you there has to be a directional move. So 9th, we made a top. And then 9th to 14th was a directional expectation. That is what happened. We got a direction. Market continued in that direction. Good. So right now, the next time cycle zone starts from 24th July. I think this is Thursday, right? So 23rd onwards. So 23rd onwards, next day, that is your 24th July. You can say, let's assume that 24th July is expiry day. So market won't move much. Expiry date is Thursday. So market won't move much. Just an example. I will take it as default, or market can bounce before that and go sideways here. So idea is what? If market is made a low already before this zone, before the time zone, if market makes a low, bounces here, and then what I told you again before, I want to see an N pattern in the market, right? If the N pattern comes in this zone, very good. If N pattern comes after this zone, no problem. But I want to see an N pattern if I'm an option buyer or a futures player. All right. So this zone will be very important for me to understand what is happening. Why? This August first week, what is there? There is a global event of tariffs and everything. Tariffs start again, extra tariffs. All that is happening. Every day we're getting some news towards the end of the market closing that, okay, India deal will come, India deal with India will come. Next day, the market is getting pumped. And then next day we get the news that, okay, the deal might be delayed. Some agriculture products are not yet finalized, so and so. All this narrative setting, manipulation, all this is happening. So point here is that very simple. Time cycle wise, 24th onwards, it should start a directional move towards 29th. Now the directional move comes as a form of correction or full force rally. We don't know that. It'll depend on the price action before the time zone. All right. I'll share whatever updates I have in the Telegram group in the live market. So in the Telegram group, what I did was last week we had some stocks which I shared with time zone. So in the time zone, what you need to do is you want to study the wave analysis using the study material on YouTube. This is for those who are serious, those who are really studying where to apply your wave analysis. This is what some help I'm doing, right? It's free. It's there in the Telegram group. Keep in mind, Telegram group is free to join. You can leave anytime, but joining is only once. All right. So Muthoot Finance, we had this stock in from the list of stocks and it gave a decent reaction from the time zone. HDFC Bank, very good reaction from the time zone, exact top here, and nearly 3.5%, nearly 3.5% fall in the market. So this is a very, very definitely powerful move in the market. It moved the main headline indices also, Nifty and Bank Nifty, HDFC Bank. Britannia, a small scalp setup here based on your structure. This is clearly, you can see this entire move, which broke down here, small scalp setup here. Pullback came as the last leg and then market continues. This is an entire move here in the market, right? So this wave analysis, what to do, how to study, where to study, you can do it in this time zone specifically. All right. DLF was a Friday pick. So this time zone was on Friday first hour. You can expect the movement or you can expect your, let's say, movement to come next week. So this zone becomes very important. It's a sideways zone. So if this zone continues, it can pull back down like this, right? Little bit as A, B, C wave, right? C wave can continue on the downside. Next, what we have was Larsen. Larsen also again was a Friday pick. This immediately gave the reaction on Friday itself. Unlike your DLF was a little bit sideways. Larsen and Tubro, LT, Larsen and Tubro, right? That is a symbol. This gave a direct reaction on Friday itself. Definitely star of the week was HDFC Bank, 3.5% star of the week. We'll see next week what happens, which stocks come. I'll share it on Monday or Tuesday and see the setups that you can study the setups as per your own understanding. All right. Thank you guys. I'll see you in the next video. Till then, take care and be safe.